What's up, guys? Stas here. So I made some moves in my M1 Finance portfolio recently. I actually sold 2 stocks and I ended up taking those proceeds and buying 2 new stocks. So in this video, we're going to talk about exactly what those stocks are, why I made those moves, and in general, what my M1 Finance portfolio is looking like as the market has been recovering here over the past couple of weeks. So if you guys enjoy the content, as always, hit that like button, consider subscribing, and let's get right into it. So as of right now, my M1 Finance portfolio is just shy of about $3,700. It's at $3,687.43 to be exact. And you guys can see, if we're taking a look at the overall kind of grasp of what's been going on with this portfolio, let's say over the past year, and by the way, I started this back in July of 2019 as an experiment portfolio here for the YouTube channel, and I'll link down below in the description the playlist so you guys can actually go see from the beginning back in July how it started and how the portfolio has developed over time. But you guys can see all time here, obviously we hit a huge peak at about 3170 back before the big crash, and during the crash from 3170 in the beginning of March down to about or up to about March 23rd, we got down to roughly $2,400 on the portfolio. So it trimmed about $700, quite the big drop. But as the Fed has been pumping more money, and we know that they're not going to stop this, they're using all of their tools to their fullest extent, right? As what Jerome Powell, that's what Jerome Powell's been saying, with all this happening. And by the way, Jerome Powell's not looking to go negative interest rates. He thinks long term that's bad for the economy, which I do agree with, but that's kind of a different topic. But I figured to just let you guys know. And Jerome Powell, with all the stimulus stuff, all the negative rates, or not the negative rates, but cutting rates, this has been pushing up the markets quite drastically from that March 23rd, bottom to where we are right now. And in terms of my portfolio, it's gone from what, like $2,300 up to about $3,700. And mind you guys, I did add some money to the portfolio, so that's not all, price appreciation, but it's quite the recovery considering I added about like a couple $100, during this crash and over the past couple of weeks as it's been recovering. So overall, guys, that's what the portfolio's been doing. And in terms of my holdings, I have SPHD, DGRO, Realty Income, Microsoft, Disney, J&J, Amazon. You guys can see them for yourselves. These are all of my holdings. And as of now, I have about 19 in this portfolio, 19 positions, cost basis around $3,082. So overall, I have an unrealized gain, meaning I have not sold out, right? So I have an unrealized gain of about $102 in the red. So since January or July, when I started the portfolio back in 2019, I have lost money in theory, right, when it comes down to my unrealized gains. But since this is a dividend growth portfolio, in theory, I haven't lost money too, because I've actually been gaining dividends, which is the goal of this portfolio long term. It's to have a nice stream of dividends and also have some growth in there, which is why I have companies like Amazon, Disney, Microsoft. These are all companies that have high dividend growth. So what stocks did I end up, what did I end up selling and what did I end up buying? Let's go over here to activity. You guys can see this was actually about a week ago I made this move, and I figured, why not make the video now? It's a week later. Markets have recovered a bit. Not recovered a bit, but, the trades and the portfolio has kind of balanced out a bit. And you guys can see I sold out of GLD, I sold out of Boeing, and I sold out of Wells Fargo. So 2 stocks I ended up selling out of and 1 ETF. So GLD, let's talk about this one first. GLD is a gold ETF. It pretty much tracks the price of gold. So if you don't have physical gold, if you don't have exposure to, let's say, gold stocks, this could be a great ETF to hold in your portfolio. But since I personally have physical gold, and I also own gold gold stocks for some hedge, against the market, against the economy, the dollar, I figured there's no need to have this $113 in GLD in this portfolio. Might as well just scrap it and reinvest it into some dividend growth stocks. So I got rid of GLD because I already have gold in my possession with physical gold, right? And these next two, the stocks, I sold out of Boeing and I sold out of Wells Fargo. And remember, guys, this is a dividend portfolio. So why did I cut out? It's a dividend-focused portfolio. So why did I cut out of Boeing? Well, their management is in shambles right now. The business itself is in shambles, and they cut the dividend completely. And I've already said in this series where I've been building my portfolio, I've said Boeing was a mistake investment. The price got a bit bubbly, all the share buybacks, it got up to $400. They didn't have enough cash to kind of maintain, through rough times like we're seeing right now. And I bought in a bit high, and sometimes when you're an investor, guys, you have to admit your losses, and you have to not lie to yourself. And for me, I'm looking at Boeing, no dividend, management is a problem. The future next couple years with, the whole travel industry, planes, it's looking a bit meek, right? So I figured, let me cut out of that, take my loss of about 30-40%, whatever it ended up being, and I reinvested. And Wells Fargo, banks in general right now, guys, I know recently they've been rallying back up, but banks in general, they're under a lot of pressure as well, because remember, as interest rates go down, the Fed funds rate, banks are making less money, and a lot of the time, if rates go negative, they're going to be making even less money, right? So the whole interest rate environment right now is not too good for banks, and Wells Fargo is another one that I admitted in previous videos wasn't the best investment, but then again, I only had 1% of my whole portfolio in Wells Fargo, but I figured, let me cut it, right? Let me cut it out and reinvest it, as, again, banks are under pressure here. Their profits are slimming down, and that worries me a bit. And I already own SPHD, a couple of ETFs that have exposure to financials, so I feel covered in terms of having at least some exposure to financials in the portfolio. So that's kind of what I sold, and what I bought with the proceeds was here. I bought a lot of stocks, guys. I bought 2 new positions in Procter & Gamble and Pepsi. And let me explain. Both of these stocks, very solid dividends, dependable dividends. The growth of the dividend for Procter & Gamble, not as good as a lot of stocks out there, but from my memory, they are a dividend king, right? So they've been paying their dividend and growing it for 50 plus years, 50 consecutive years. And same thing with Pepsi, if my memory is correct. And their product line is another massive reason why I invested in them. Pepsi, you have obviously the products, or rather the soda products, you have all the snack products. We can go on and on about all the products Pepsi has. And Procter & Gamble, consumer staples from, paper towels, toilet paper, the whole 9 yards, right? So these companies have goods that are going to be used no matter what time period we're in. So I figured, let me add them. And mind you, these are ones that I've wanted to add to the portfolio for a while now. So I figured, why not right now? The valuations are a bit frothy, but, this is a long-term portfolio, guys. I'm looking 5, 10 plus years out, so it doesn't really matter. I just want to get my capital working for me. And you guys can see I also bought some PayPal, a little bit more of Amazon, MasterCard, DGRO, VEA, which is a Vanguard FTSE Developed Markets ETF. So that's kind of what I've been doing as of late. Nothing crazy, just moving a couple $100 around. And you guys know that my goal with this portfolio right now is not to grow it to a massive amount, because quite frankly, this is a side portfolio for me. My main portfolios are on Fidelity. That's where I do most of my trading and my investing. This is kind of just a YouTube project portfolio, so you guys can see what I'm doing, right? But my goal is, and you guys can see here, $500, back in May 15th, my goal is to deposit $500 to about $1,000 per month into this portfolio and also just reinvest all of the dividends. So in this month, we've gotten AT&T dividends, MasterCard, we got AbbVie, Realty Income. So that's kind of what I'm working with here, and that's my goal. Just $500, $1,000 a month, dollar cost average, and just reinvest the dividends. And mind you guys, again, I have other portfolios. I'm also maxing out a Roth IRA. So that's kind of what I'm doing right now. And when it comes down to bulk investing, and by that I mean if I see an undervalued company, because me guys, I like doing the dollar cost average investing, this type of long-term blue chip stuff, stock stuff, but I also like looking at my own kind of picks where I go into some undervalued stocks, this and that, and when it comes down to that, I haven't done much because I'm not seeing much value out there in a lot of, let's say growth names, some risky plays for the long term. Let's say, for example, like, Tesla, Shopify, Square, stocks like this. I'm not seeing much potential as of right now at the current valuation. So that's why, other than the Roth, other than this long-term portfolio here and some other ones, little accounts I have, I'm not doing much investing. I'm mostly just sticking to cash, hoarding it, honestly, guys, quite honestly. I have some gold. I've been buying into Bitcoin. I'll link down my Bitcoin video down below in the description showing you all where I bought Bitcoin from. And that's kind of what I've been doing, guys, just diversifying across Bitcoin, gold stocks, stock market, real estate. I'm getting there down the line. Don't have a property quite yet, but that's kind of what I'm doing and just focusing a lot on building my cash position for just it's important to have an emergency fund, of course, that's a given, but I'm building up the cash to just take advantage of either real estate opportunities, more stock market opportunities, and so forth, right, guys? So overall, that's the update for today's video, the M1 Finance update. If you guys enjoyed it, feel free to go down below, hit that like button for me. Let's try to get 100 likes on this video. I challenge you guys, and let me know what you've been doing out there in the stock market. I would love to know, as always. And if you guys actually want to sign up for M1 Finance, I believe you get $10 if you open up an account and just deposit any amount of money. It might be $100. I don't know. Just check the link down below in the description. It'll show you the details. And yeah, feel free to get that $10, guys. This is a great platform. I've been using it for a year, have a lot of experience with it, and honestly, I've had no problems, and I just love the layout, and I think it's great for long-term investing, and that's key, guys. Long-term investing. This is not meant for day trading or swing trading. This is simply meant for long-term. So if that interests you, again, that's linked down below in the description. I'll catch you all in the next video. Oh, and by the way, guys, today is my birthday. I'm 24 years old on this day that you're watching it. So happy birthday to me, guys. I'll catch you all in the next video. Again, thanks for watching as always. Peace out.